So whenever it comes to double entry system, the Wipro, Infosys, some other big companies, what they will do, they will record both the aspects, that is called as double entry system. So under this system, generally personal accounts are maintained, but real and nominal accounts are not generally maintained. They want to go from the single entry to double entry. So this is called as conversion of single entry system into double entry system. Hello everyone, welcome to the first session of Unit 1 of Advanced Financial Accounting. My name is Sri Devi, Faculty, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. So agenda for today's video is single entry system, features of single entry system, difference between single entry and double entry, next problem and solution. Okay, now let us see what is the meaning of single entry system. So in accounting system, which is not based on double entry, is known as incomplete accounting system. So if any transaction is recorded not based on the double entry, then it is called as incomplete accounting system, or it is also called as single entry system. So in other words, in single entry system, or a single entry system is a system of bookkeeping in which some transactions, both the aspects are recorded, but for some transactions only one aspect is recorded, and for some transaction no record is made. That means if some transactions are happening, both the effects are recorded in the books of accounts. For some transaction only one aspect is recorded, and some other transactions both the aspects are not recorded. So here in single entry system, under which the personal accounts and cash books are maintained and only one aspect of transaction is recorded. That means in single entry system, what is recorded? Personal account and cash accounts are recorded. For example, if I am a street vendor, what I'll do? I'll write only my receipts and payments. That means this single entry system is useful for street vendors. What they usually do, they will write only their expenses and the receipts, or incomes and expenses. So whenever it comes to double entry system, the Wipro, Infosys, some other big companies, what they will do, they will record both the aspects, that is called as double entry system. Okay, now let us see the features of single entry system. So it is a system of maintaining business transaction in an unsystematic and unscientific manner. So most of the transaction records only one aspect made in the books of accounts. Here, generally, this type of system is adopted by petty business organization carried out by sole traders and firms where the number of transactions are limited. So under this system, generally personal accounts are maintained, but real and nominal accounts are not generally maintained. And the results obtained under this method is not very accurate, or it is not scientific. Now let us see the differences between single entry system and double entry system. So here, basis of difference we will see. The first one is both the aspects. That means in double entry system, both the aspects of business transactions are recorded. That means here not only the personal account, cash book or bank account are recorded, also the nominal accounts are also recorded. But in single entry system, in some cases both, and in some other cases only one aspect is recorded. So next, accounts. So here in double entry system, all the accounts, that means personal, real and nominal accounts are open, but whenever it comes to single entry system, only personal and cash accounts are opened. Next, trial balance. In double entry system, trial balance can be prepared, but here in single entry system, trial balance cannot be prepared. Profit and loss account. Here in the double entry system, trading and profit and loss accounts are prepared. Why? To find out the gross profit and net profit of the organization. But here in single entry system, trading and profit and loss account are not open. Next, financial position. So here in double entry system, to find out the financial position of the business, balance sheet can be prepared. But here in single entry system, balance sheet cannot be prepared. Next, method. In double entry system is a scientific method, but single entry system is crude and unscientific method. Next, reliability. Double entry system is more reliable, but single entry system is not reliable. Utility. That means double entry system is suitable for all the business transactions or all type of business, but single entry system is only suitable for petty businesses or sole trading concern, and also the partnership firms. So because of these differences, what business will do? They want to change their single entry system into double entry system. That means they want to go from the single entry to double entry. So this is called as conversion of single entry system into double entry system. So in single entry system, whenever we are following single entry system, then we want to convert it into double entry system. What we will do? We have to prepare so many accounts. So what are those accounts? First one is statement of affairs. Why statement of affairs? Because in single entry system, the capital is not given. So find out the opening capital. We have to calculate the statement of affairs, and also we have to prepare the cash book to find out the cash balance of the business, and also we have to calculate the total debtors account, total creditors account, trading and profit and loss account, and the balance sheet. So let us see how to do that. So first problem is, Srinivas carries a small business but does not maintain a complete set of account of books. So here that means he is maintaining his books of accounts in single entry system. He banks all the receipts and makes all the payments by checks. The following are the particulars obtained from the records. Receipts and payment for the year ended 31st March 2002. So here receipts and payment account is given. Let us see the receipt. Cash from debtors 35,250. Cash sales 8,250. Additional capital, that is 5,000. Now let us see the payments. Furniture is 1,250. That means the new furniture purchased. Drawings 3,000. Wages 13,450. Salaries 2,650. Rent 2,400. Sundry expenses 5,200. And paid to creditor is 15,250. Now let us see the assets and liabilities. So here furniture, opening is given, closing is given. That means there is the additional purchase of furniture, and also we should see the opening balance and closing balance, and we have to add the purchase of new furniture. Then we will come to know the depreciation. Next one, sundry debtors, opening and closing is given. Stock, opening and closing is given. Bank is opening is given, closing is not given. So what we have to do? We have to open a bank account to find out the closing balance of bank. Next, sundry creditor is also given. So provide reserve for doubtful debts is 500. So from the following particulars, prepare trading and profit and loss account for the year ended 31st March 2022 and a balance sheet as on that date. So first what we have to do? We have to prepare the statement of affairs. So why to prepare the statement of affairs? Because capital is not given. So we have to find out the capital. To find out the capital, what we have to do? We have to make the statement of affairs. So how to make the statement of affairs? We have to put all the assets and all the liabilities. Then the balancing figure will be the capital. But make a note, there should not be any drawings. So we should not include the drawings. So let us do that. So statement of affairs as on 1/4/2021. So here what did they say? Here ended 31st March 2002. We have to prepare trading and profit and loss account. So this is closing. So what we have to do? We have to take all the opening assets and liabilities to find out the capital. So here statement of affairs. See, furniture is given. How much is the furniture? So we have to take all the opening ones, not the closing ones. So furniture is given 15,000. Where it will go? It will go to statement of affairs. Stock is given, so it is an opening stock. Bank is given, it is an opening bank balance. Sundry creditors is also given, that is 5,050. Let us go to statement of affairs. So assets we have written. What is that? Furniture 15,000. So where is it? This furniture 15,000. Next, sundry debtors. How much is the sundry debtors? 7,500. Next, stock account. Stock. This opening stock we have to write. So stock is given. Next, bank 1,250. That is also given. So these four items will go to the asset side of the statement of affairs. What and all the opening items. What is that? Furniture 15,000, sundry debtors 7,500, stock 12,500, bank 1,250. Make sure to write as on 1/4/2021. That means opening, not the closing ones. Next, sundry creditors. What is sundry creditors? Sundry creditor is a liability. So where it will go? It will go to the liability side. So here, sundry creditors. So we have written all the assets. What and all? Opening balance of furniture, sundry debtors, stock and bank. Next, we will write the sundry creditors. We will total it. How much it will come? 36,250. And what is the difference? 36,250 minus 5,050. What is that? That is the capital. That is balance in figure. This is 31,200. That is the capital of our organization. So what is the first step? Finding the capital. We already did it. So we already did the statement of affairs to find out the capital account. Now let us do total debtors account. So how to do the total debtors account? So to do the total debtors account, first we have to write to balance brought down and by balance carried down. So let us think, there is the total debtors account. So first what we have to write? We have to write to balance brought down. Next what we have to write? By balance carried down, by leaving some space. So here, go to sundry debtors. So how much is the opening one? 7,500. So 7,500 we will write here. And let us see the closing one. Closing one is 12,500, 12,250. So 12,250, here is the 7,500. That is what we have to write in the first place. After that, now let us see any payment received from debtors. That means cash received from debtors. See here in the receipt side, cash received from debtors are there. How much is that? 35,250. So that we will write here by bank. 35,250. What is this? Cash received. Cash received from who? Cash received from debtors. So that is the three entries or transactions coming in total debtors account. So after that what we have to do? We have to total this. What is that? 35,250 plus 12,250. 47,500 will come. Next we have to minus this. So how much is that? 7,500. This 40,000 is the balancing figure and that is called as credit sale. So that what is the difference between the debit side and credit side of the total debtors account? That is credit sale. Okay, now let us do the total creditors account. Like how we did the total debtors account, like that only we have to write here. But instead of writing the debit side first, what we have to do? We have to write it in the credit side. What we have to write? By balance brought down. See here, creditors. This one, by balance brought down 5,050 and this one to balance carried down. See here, by balance brought down 5,050 and here down you write to balance carried down. How much it is? 4,800. Now let us see the cash paid to creditors are there. Let us check here. Paid to creditors 15,250. What we have to do? We have to write it to bank. How much is that? 15,250. To bank, so carry down will not come. So we have to write to bank account. So how much is that? 15,250. We have written balance brought down, balance carried down and also bank account we have written. So this side will come more. That's 15,250 plus 4,800. How much will be the total? 20,050. So whenever we deduct this 5,050, this 15,000 will come, right? This 15,000 will be the credit purchase. So what is the difference between total debtor account? That is credit sale. And what is the difference between total creditors account? That is credit purchase. So like this we have to do the total debtors account and total creditors account. Now let us do the bank account. So in that bank account, first balance, whatever is there, no, the opening balance, I'll show you. This one, 1,250. That will be the to balance brought down 1,250. After that, this one. So what is that? All the payments, I mean all the expenses will come this side. All the incomes will come this side, or receipts. All the receipts will come this side. So here all the expenses will come in the credit side and the debit side, what will come? The receipts. Let us see. Furniture, drawings also payment or expense, wages will come, salary will come, rent will come and sundry expenses and also paid to creditors. See here, furniture, drawing, wages, salary, rent, sundry expenses, creditors, that will come here. All the receipts. All the receipts means what and all the receipts? Cash from debtors, cash sales and additional capital. So, balance already wrote, debtors, that is cash from debtors, this one 35,250, and cash sale will come and additional capital will come. So, here whatever is the balance is there, no, this is the closing balance of the bank. So, this is the balancing figure. Now, let us do the trading in profit and loss account. So, opening stock is given 12,500, that is the opening stock. Purchases are there. So, purchases, how much is the purchase here? Is it given here purchases? No. So, from where we have to find out the purchases? We have to find out the purchases from this total creditors account. So, in total creditors account, by credit purchase, this 15,000 is there, no? That is the purchases, and here in total debtors account, the balancing figure credit sale is there, no? That is the sale. So, here purchases 15,000 and wages is there. After that sale, cash sale is given. See here, cash sale is already given, that we have to include, and credit sale we found it from the total debtors account, that also we have to include. So, cash sales, credit sale, closing stock is also given, that is 6,250. After that, as usual, we found out the gross profit, and after that we have to write all the expenses in the profit and loss account. What is that? Salary, rent, sundry expenses and provision for doubtful debts. Where is it given? It is given in the adjustment. Provide reserve for doubtful debts. So, provision for doubtful debt is given. Depreciation in furniture is given. How to calculate the depreciation on the furniture? That calculation we will see first. So, opening balance of the furniture is given. How much is that? 15,000. Additional purchase is made. How much? 1,250. Total will be 16,250. In that closing balance is given in the problem. So, that will be deducted. Then whatever we will get, right, that will be the depreciation on the furniture. So, that we got. And gross profit already we brought it down from the trading account. And whatever we got here, the balancing figure, that is the net profit. The last one what we have to do, we have to do the balance sheet. So, this is the liability side, this is the asset side. What and all will come? Sundry creditors will come. So, where is it? Sundry creditors, this one, closing. Sundry creditors and sundry debtors is this one, closing, 12,250. See here, sundry creditors 4,800, sundry debtors, how much is the sundry debtor? 12,250. So, sundry debtors is 12,250. So, provision for doubtful debt is there. So, sundry debtors is 12,250. Provision minus provision for doubtful debt 500. When we minus it, how much we will get? 11,750. So, what and all the amounts are there? Sundry creditors are there 4,800. Opening capital is there 31,200. So, that we calculated in the statement of affairs. How much? 31,200. Additional capital is given in the problem. This one 5,000. Next, net profit we already found out 2,050. Total it will be 38,250. Drawings we will deduct it. So, it will be 35,250. Here, cash at bank. How much is cash at bank? Cash at bank is 1,550. Sundry debtors 12,250. Next, minus provision for doubtful debt 500 we will deduct it. How much we will get? 11,750. So, this stock is closing stock, that is 6,250. Furniture 15,500. So, what will be the total? Total will be the 40,050. So, this is how we have to do the problem, that how to convert the single entry system into a double entry system. This is all for today's session. Thank you.